All right, Bud Fox. Bobby Piton here with PreActive Investments. And just a healthy reminder, if anybody wants to fill out a questionnaire, I've been getting some nasty ones. I will say that much, based on some of my, calling out Crenshaw. I didn't realize there were so many Democrats that would attack me for what I did with Crenshaw. maybe they're upset because he's been exposed as the Trojan donkey that he is, and they don't want anything to do with it, folks. And so, anyways, that's what's going on. Hello, Henry, Susan, Scott, Rita. So what we're going to do is, I had to get a chuckle about that, by the way. I do find it pretty fascinating, to say the least, of the nasty, the time that people will actually take the time out of their day to write a nasty email. And it doesn't even go to me, right? These emails go to my wife. So my wife's like, what the heck is going on over here? I said, you know what? Don't worry. We're going to have a nice little mean email section at some point. I'm going to read off mean emails to Bobby Piton. Kind of like those mean tweets. But the difference is I'm just going to laugh the whole time I read it. That's the problem. I don't really, this stuff doesn't bother me because we all know it's a bunch of, whatever. You know what I mean? It's all just, anyways, I'm trying not to curse. My wife has asked me to try to stay away from cursing. So I'm doing my best, and I'm not going to curse. So I'm not going to curse everybody. So that's the deal. So let's go into, let's go take a look at what's going on today. Let me see here. So, if you notice here, these are the companies that are reporting today. And so there's about 80 companies before market and after market. And right now, let me see here. We have the biggest winner on the day is up 8%. And then the biggest loser on the day is down 30%. So like I said, what I'm going to do is I'm going to focus on, who are the companies, who's the biggest winner and who's the biggest loser. So I'm just showing you guys how I'm doing this. So I'm not trying to play favorites. This is all for educational purposes only, folks. But we'll go to the SEC filing, and then we're going to quickly say, okay, what's going on here? Who's the biggest winner? Who's the biggest loser? Here's the market cap. And then we'll see where we're at. And then I'll pull down the filing. Okay, so we just do a quick sort. And we're going to go by A. Okay, so there's some weird $26 million company called South Gobi. Gobi, I think, is like a Gobi guppy, So this is a foreign stock, folks. When you see 5 tickers or 5 letters in a ticker, that tends to be a foreign stock. So we may not look at this one. Yeah, see, this is meaningless. Something is 14 cents. I'm not going to do any analysis on it, folks. It's in Canada, so we're not going to do anything with that one. So that one's not making the cut. So then, in terms of the next one, we're going to go to EVK. Okay, this thing is Ever Glory International Group, and $48 million company, down 20% today. And let's see if it's worth. Boy, I'm not interested. It's in China. We're not doing any China analysis, folks. Not on my watch. I'm not interested on any Chinese stocks. Not going to happen. They can get the hell out of here. As far as I'm concerned, they shouldn't even be able to list any stocks on our exchanges. And so I think it's ridiculous that they're allowed to list their stocks on our exchanges. So once again, Emerson Radio, largest volume consumer electronics distributors, $24 million company. I don't think so. I don't think that one's worth looking at either for educational purposes. So we need to, I'm going to try to find a bigger one. Okay, Twin Disc is only down 4.6%. Let's look at them. It's a $180 million company. I think I'm going to make the cutoff a couple hundred million, folks. I mean, I don't. On these tiny micro caps, they're so nuanced. This one's based out of Belgium. Look at this. A lot of foreign stocks here, folks. So here we go. 57 million of revenue. Margins are down. $94,000. Off-road. They do power transmission equipment. And so let's see what their filing looks like. If their filing on the SEC site isn't a big pain, like they can be with international stocks, if it's not a big pain, then we'll pull it down. So here we go. We got an 8K. All right. So we got the filing. Okay, so this is the one we're going to go with. Let me expand this. Hold on a second. Okay, so we're going to look at twin disc. So I don't know if they were always in Belgium, but maybe they moved to Belgium for tax purposes. So twin disc, fourth quarter sales are up 11%. Gross margin improved 440 basis points. Obviously, last year was an easy comp to basically to round trip on. So that's something to always keep in mind. If this was during normal times and a company expanded by 440 basis points or 4.4%, that would be a huge deal. They drove $2 million of annualized savings by some restructuring. And, that's about 1% of revenues, right? Because not exactly. Their revenues were $66 million. So if you could save $2 million on a run rate of $250 million or so, that's about 80 basis points. If they pocket all that money, that would fall right to the bottom line. So let's take a look at what's going on. So the company's business with global oil and gas, industrial and marine markets is what's improved. So for the year of 2021, the sales were $218.6 million versus $246. So they had $4 million of favorable impact. That means when the dollar weakens, that's what happens, that they picked up additional sales. And so let's take a look at what is going on here. 6.6 million. There you go. 6.6 million of restructuring charges. Let me take a look here. So this is what we have for the quarter, then we have for the year. So even though the revenue is up, they took a restructuring charge of 6.6 million. For the year, 7.377 so far, the first 6 months of the year. They took a lot of restructuring last year, 5 million. And then they took 27.6 million of goodwill impairment. That's probably during the pandemic. And obviously part of this is a non-cash item. So even though they showed a big loss from operations, some of it was a write-down of goodwill. And so you got to know the difference if you're looking at that. And it's important to look at that. Because on the surface, it would look like they burned through $43 million of cash. And they did not. They burned through, let's take a look, interest expense, $2 million, income taxes. They got a refund. Let's see if we have their cash flow statement. So you can see 192. Their cash is up about 18 million year over year. And but the total assets are down. So this is their current assets went up. Total assets are down. So that means that they're selling something, assets held for sale. So they moved something from their property, plant, and equipment total right here. If you look, it went from 58 million to 45. So they're selling something. They're selling property, plant, and equipment. That's what's going on. They increased their debt. So the current liabilities went up by over 10 million. So current assets going up by 18, current liabilities going up by 10, but then they transferred assets from long-term to short-term that they're going to sell. So it seems to be a wash. There's nothing to look at there. And then here, they've made $135 million of retained earnings over the life of this company. But they took a big impairment because this number dropped from 156 to 135. So that's what happened there. And so let's see where we're at on the cash flow side. So as you recall, even though they booked a loss of $39 million a year ago, right? I said that a lot of that was goodwill. This is that $27,600,000 right here. So that was not a cash expense. This was writing down part of their book value. And you can see that for the year ended June 30th, they still had $9 million of cash. Okay? I mean, they generated $9.1 million of cash, even though they lost money. So now keep in mind, part of the reason for that is what? They changed their working capital needs by $13.5 million. So they had $4.5 million, okay, their change in working capital is they took on more short-term debt, because working capital is current assets minus current liabilities. So if your assets are flat and your working capital goes positive on your cash flow, you have to take on more short-term debt. So then your net working capital goes down, but you can have a situation where your cash goes up. It's important that you keep track of that. If you're doing this analysis on your own. You can see they spent a lot of money on CapEx, $10.7 million a year ago versus $4.5 now. Their financing activities, $4.3 million for the first 6 months versus $1 million a year ago. And then that's where we're at. So this company, what would be concerning, and probably why it's down, because it's down today, okay, is what? Let's take a look. If we look at the company for the quarter, so even though their revenues went up, they took another $6.6 million charge. That's why they had a loss from operations. But then they booked a gain from the extinguishment of a loan, which is interesting. So, that's not cool, right? But extinguishing that loan obviously triggered an income tax event of $14.1 million. So that's why they actually had a loss. So triggering this income from extinguishment of loan, they paid down some kind of loan that triggered them having to pay taxes, probably, unless this was part of the sale. They must have extinguished a loan when they sold the division, and that division might have had a low cost basis, and that triggered this $14 million in taxes that was on the balance sheet that was not owed until they did something, which is why they lost money. So let's look at long-term liabilities, their deferred income taxes. Okay, so right here. Okay, so here it is. This is what must have happened. So we look here, folks, all these numbers have to tie out. Your cash flow statement, balance sheet statement, income statement have to tie out. If you don't know how they tie out, you need to study it a little more if you're going to do this. So you can see their accrued retirement benefits. They went from $27.9 million to $11.2. Okay, so this is a liability. So somehow they transferred this liability. Okay, and so that by transferring that liability is what more than likely triggered that taxable event. And so that's why they had to pay the $14 million of taxes to get that off the books, because this was a long-term liability. So they cut their long-term liabilities. Look at this, by $10 million right here. So this had to be in here. This is what happened. They They took their long-term debt down by $8 million. They took that gain. They got rid of some accrued retirement benefits, and then other long-term liabilities went up by 3.6 million. I'm not sure what that is. So, I mean, this could be a good decision long-term. It's based out of Racine, even though it says it's headquartered in Belgium and Racine. The stock is down. Once again, I don't have an opinion on whether or not you should buy it. The stock was as low as 466. And, you know, if you think the company is going to normalize at a decent long-term rate on earnings, you know, it might be worth looking at. I don't have an opinion at this time, but what I will say is they did make some positive improvements to their balance sheet. And this sell-off today, I'm not sure if it's entirely warranted with them beating on the revenue and then doing things to delever their balance sheet. But you can see it's had a hell of a move already. So the stock market might have already got a whiff of what they were doing to clean up their balance sheet. The stock was under $10 on April 28th, and now it's $13.50, even though a couple of days ago it was $15.60. So it was up 50% in a few months. So folks, you always have to remember, if something moves up and the news is good and you're like, why isn't it going up more? The news was good and I bought it, and you know, it might be because it already had the good news priced in, right? You paid the price that everybody was anticipating of what was going to happen. So you have to really tread lightly when you're buying it. You have to know where you're buying it in the cycle. Okay, so let's see who's winning today, and we're going to take a look at what do we got here? We got Knight Therapy. Once again, this is 5. It's either a pink sheet or foreign stock. So we're going to look at this. This is up 8%. Knight Therapeutics. Okay. Based out of Canada, 6.16 million. And I don't know who this Arvind Uchan. I don't know. He's got his MBA, Yale MBA. See, I don't know. I would have to. I'm not, like I said, I don't want to do Canadian stocks, but it's based in Montreal, focused on in licensing innovative pharmaceutical products. Okay, not interested. So let's look at Trillium, which looks like that is a U.S. stock, $600 million. And this one, once again, this is based out of Canada. Surprised we have these Canadian companies, you know, I guess using our market for these biotechs, right? It's kind of interesting. So let's take a look at, I don't want to do that one either, VER. We're going to do VERO. Okay, 6 cents, $2 stock. No, we don't want to do that. Hold on. Is there anything interesting about it? Let's take a look. Losing $9 million on $22 million of revenue. No, thank you. You know, some of this I'm just not interested. If something's losing $9 million on $20 million in sales, it's not my cup of tea. I'm not going to spend time looking at it, folks. CAD is. Let's see what this is here. So CAD is CADIZ. Wow, look at that. 139,000 revenue, losing $5 million. This must be kind of a weird thing. Maybe it's some kind of thing they're going to try to blank check company. $600 million company with no revenues. This is unbelievable. Let's go look at this one. CDZI. I just for the heck of it, we're going to be quick on this one. But I want to know why this company with no revenues is worth $600 million. So this is more of a curiosity thing. There's nothing I would do with this thing. But let's take a look at what is going on with CDZI. Wow, we don't even have we can't even pull a report. Why can't we find? Okay, let's try again. CADIS, CDZI. CADIS. So, no, that's not it. Okay, so here we go. We found it. This is the hotel. So we're gonna go here, and we're gonna see what is going on with this little guy. Okay, so I don't know why. Okay, so here we go. They obviously this is some kind of hotel. They must be building, which is why they have no revenue. But then they have huge losses. They have almost 40 million shares outstanding now as they're building. So let's take a look at their balance sheet because that's what matters. So they lost a lot of money. They passed that on to shareholders. Wow, $11 million of cash. And then they have a deficit of, they have long-term debt of $82 million, $40 million. Doesn't make any sense, folks. Hold on a second. This thing has a loss of $550 million, paid in capital of $551. What the hell? $551 million. And then let me take a look here. $551 million of paid in capital. They have 11 million of cash, and they're saying they have 40 million shares outstanding. 40 million shares. This thing's worth $570 million with $500 million of losses, with $12 million of cash. They have 10 employees based out of LA. Something doesn't make sense. So the only thing I can think of, this doesn't make any sense because we'd have to find out what are these assets exactly. Like maybe they're misstated on the book. Property, plant, equipment, and water programs. So somehow they're in the business. Maybe they have water rights. Maybe that's it. You know? And so as a result, let me take a look here. As a result, give me 1 second. I just want to respond to a client. We'll call right after stream. Okay. So, yeah, I mean, it's interesting. The only reason why this thing could be worth this much, in my opinion, with quickly looking at it, is they must have something going, and you would have to look at the 10K to find out what do they own that people are willing to pay $500 million for. Yeah, it looks, well, they had a Caddis Hotel, so this must be water rights. And I do think, Susan, you're on to something. So there you go. They own 70 square miles of property and water resources. Okay, well, thank you, Susan, for finding that. So 70 million square miles, or no, 70 square miles, not 70 million, 70 square miles of property and water resources. You could price it by what that would be worth. But anyways, it's up today. So obviously water rights are going a little better. So let me take a look. We're going to do one last one. We'll do, I don't know, Seabridge Gold. Yeah, gold, copper. All these companies. It's not a lot of interesting stuff today. Let's look at Lifeway Foods. It's only up 1%, but we'll just take a look at it just for the heck of it. So let's take a look at Lifeway. Hold on a second here. Is LWAY. Okay. No, they didn't report. I don't know why it's on the list here. That doesn't make sense. So then, let me see here. A lot of companies with Marathon Digital Holdings. Let's see if they report it. That's a $3 billion company. MARA. So MARA, current report. I guess they reported a couple days ago. No, this is nothing. This is just, it was a material change. There was some kind of boat taking place. So, I don't know, folks. There isn't a whole lot going on. Let's see if we can just go to CNBC and see who's a big winner or loser is on the day. And then we'll go to the SEC site and see if we can find any filings on it. So right here, if we can see a big mover on the day is eBay is up $4. It's up 6%. HP is down 4%. China, Baidu is down 4%. So, I think that we can look at, let me take a look. Maybe what we'll do is we'll look at HPQ. Let's see if HPQ has any information. Folks, if it doesn't have any information, I think this is going to be a wrap for the day. Let's take a look. HPQ, and no, there is nothing. It's just kind of moving. So, anyways, all I could say is right now, it's Friday. A lot of companies don't report on Friday. Actually, Berkshire Hathaway is probably one of the only companies that tends to report on Friday or on Saturday after the close. They like to let people absorb everything that takes place, and so nothing's really crazy going on in the markets. It's kind of steady Eddie today. The import price index came in at 0.6. Nothing to write home about. Just it was 1%. I guess it was 1%. Hold on a second. Was the the medium forecast? Actually, it didn't come through yet. It's kind of weird. It's not posted here. But producer price index that came in higher than expected yesterday at 1% versus 0.6 of an estimate. Now, why is that a problem? Because if the cost of producing goods is up 40 basis points, if a company's making a 4 or 5% margin, that could be up to 10% of their margin, 10% of their profits being impacted if they can't pass that cost through. So that's that, folks. Nothing too crazy. A perilous heat wave this weekend will put 2/3 of the United States at risk. Something to think about, folks. Maybe there's weather weapons, right? I don't have any idea if there's truly weather weapons, but I've heard discussions about that there might be. But listen, a couple things. I'm going to be at an event today, this evening, and so if you watch my Bible study, it's day 174 today. I'll probably go live at 3:30 Central Standard Time. It'll be a quick one, maybe 30-45 minutes, because I'll be at an event for the Deep Rig. I'm going to be speaking there afterwards. Maybe I'll post a link. I don't know if there's tickets still available, but we're going to watch the movie. I'm going to probably get tired of watching this movie, folks. I'm going to these events to watch the movie, but I'll be talking about my findings with voter fraud and so forth. I don't know if I shouldn't have said that word. I'll be talking about voter integrity issues. No such thing as the F word, but the integrity issues are super important, so I'll be focused on that. So God bless you all. Have a wonderful afternoon, wonderful weekend if I don't see you. If you are back at 3:30, then God bless you. So I'll see you at 3:30 on Vimeo for day 174 of 365. So thank you, Dallas. I'll talk to you guys soon. Take care.